first question I would like to take is what is the difference between ETFs and mutual fund, and are ETFs cheaper than mutual funds?
Yeah, the inherited nature of ETF because it tracks the index and there is a limited fund manager's involvement. It has to be a low cost product. Yes, ETF are at low cost compared to other mutual funds. And I have already highlighted this point that ETFs are different from mutual fund because you can trade it on the exchange. Mutual fund you cannot buy or sell over the exchange. ETF can be bought and sold on the exchange itself. So you can trade ETF on the exchange. Mutual fund, that option is not available.
Kunal is asking what are smart beta ETFs and what's a better ETFs? Which one is better? Index fund or ETFs, because both are passive instruments. So how to choose one of them?
Yeah, so actually, both are siblings, but they behave in a different way. Index fund replicates the index. ETF is also the same strategy which has been followed. But the thing is, it is again based on your requirement. If you prefer to buy a particular product at a live price, then you should go for an ETF. And if you don't want to chase price and you are okay doing it at the day and NAV, then you can prefer index fund. But as a nature, both the products invest in the underlying index itself. So again, that's a choice. There's a demat requirement for ETF. There's a for index fund, there is no specific requirement to have a demat account. And smart beta question you have asked, basically smart beta, which I've already highlighted, that these are factor based ETF. So unlike sector or thematic or market cap, which is based on a particular sector theme or market cap, smart betas are basically taking into consideration factors. When I say factors, means these are all technical factors like standard deviation. So these particular index will follow a particular strategy. These strategies are defined by the index provider. So I'll name few strategies like momentum is one of the strategy, low wall is one of the strategy, alpha is one of the second strategy, quality is also one of the strategy. So there are different strategies which are available in the market, according to which the index is created, are called smart beta index or ETFs.
Abhishek is asking how do ETFs impact the Indian stock market and what are the potential risks associated with investing in ETFs?
From a risk standpoint, the only risk which you can contemplate in investing in ETF is how close you replicate or how different you are from the index. So that is the risk which is taken by the asset management company. The tracking error is one of the important risks of managing an ETF. So while choosing an ETF, you have to first go and see that how is the tracking error of one particular ETF. That number is already displayed on the website of each and every AMC. It is available on AMFI also. So the lower the tracking error, the better efficient the ETF or the index fund is.
One last question. Shraddha, why have ETFs become popular?
If you see the worldwide ETF AUM, which is near about $10 trillion right now. When there was a lockdown, people preferred to put their money into work. So they wanted to invest somewhere. So they wanted to invest into markets. Big time, if you see in US, there was a huge flow of AUM into ETF. If you see all the tech related index in US in last 2.5 years have given a brilliant performance because people started pouring money towards that kind of ETF. Similarly, in India, if you see, there was hardly 2.5 crore of demat account, which has now moved to near about 5 crore demat account because the similar culture was adopted in India. People started understanding the importance of capital market and they wanted to have this kind of exposure, and because there were differentiated products like gold and silver also coming in the market and creating this awareness which I think I should thank Kotak Security also, who's giving this kind of the investor education initiative where the understanding of this concept also grew substantially in last 2.5 years, which has aided to the growth of AUM of ETFs.
How are ETFs taxed in India, and what are the tax implications for investors who hold ETFs for different periods of time?
In case of equity ETF, it is taxed similar to stocks. So it's 1 year short-term capital gains at 15% and 10% long-term capital gains over the gains of more than 1 lakh. In case of debt and gold, it is fully taxed after change in tax regime.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.